Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We printed digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good morning, ladies and gentlemen, and welcome to the show on this Wednesday, the 28th of September, 2022. Thank you for tuning in. Now, what are we seeing happening here? We see a capitulation by the Bank of England. They're restarting their quantitative easing. They're listing here due to significant dysfunction in the bond market. Material risk to financial stability. Take another look at a different article here. It says that behind the Bank of England's panic, they're panicking, billions in margin calls, death spiraling into a complete bond market collapse. See, this is the thing, all these central banks, they can't, I can't express this to you guys enough. And in order for this dollar rally to continue, central banks have to stay tight. And what I've been pointing out for months, perhaps even years, is that these central banks cannot continue on this course for very much longer. And when they change direction, they change suddenly. It can happen overnight. Right? And the U.S. central bank's no different. The Federal Reserve, they can't spiral the system out into an out of control deflation. They can't do that. And so when they change direction, what they call a Fed pivot, it's just going to be a sudden sort of a thing. Overnight, you're just going to wake up some morning and they're going to be making the announcement. And I remember talking about this in some of my shows from like 3 years ago, for crying out loud. How that they'd come out and they would be in the microphones and they'd make the announcement. And then I've been actually waiting for this Fed pivot for years, because it's going to be the starting gate. And the way we're getting so close to it now, that the way that I see it, it could be more than one pivot. Like, they could pull this crap again. They could actually get out there and after they pivot this time and they start to lose control over inflation, they could decide to try to go back to tight monetary policy all over again and do this several times. But ultimately, all they're doing is slowing down the progress of something that's inevitable. It can't be stopped. And this is the fault that's in our money, means that our money has to go to zero in its purchasing power. And ultimately, the devastation that'll wreak, I was talking about that yesterday. It's worse than a war, than an all-out war. It's worse, the devastation it can wreak. But maybe there's no radiation, but the devastation it can wreak upon there is possibly ways out, but these would be radical things that they would have to do. That would be a very slow movement into something that has actual value behind it to be our money, rather than have this stuff that is not money at all. It's just money by decree, and which is not going to work. And ultimately, it's going to lead to this conclusion. Anyway, so they're having trouble here with the Bank of England, and panics now because they're worried about billions in margin calls. Right here, billions in margin calls. And they're worried about a death spiral into a complete bond market collapse. And so they've went back to quantitative easing. And, our central bank here in the United States will follow suit at a certain point. How far are they willing to go? Well, as long as the markets are going up and as long as the bond yields are going down, They're going to hold their course. Okay? And what's happening today? That's what's happening today. Markets are stabilizing, and the bond yields are actually going down on the 10-year. From what I've seen, let's take a look at the silver price today. $18.29 today for silver. What's gold doing? Gold is at $16.35, so gold's up a little bit, but silver isn't catching the bid. Gold's up $6.70 at $16.35. Take a look at cryptocurrency today. We've seen cryptocurrency's been hit awful hard over the last year or so. Bitcoin 19,070. And Ethereum's at 1305. Evidently, I heard they're dumping Ethereum onto the market. Anyway, I think they dumped 17,000 or something. Anyway, let's take a look at the Dow Jones Industrial Average. It's up 87 points. Let me refresh the page. It's up 144 points. Probably a lot of that, or some of it anyway, is going to be on the news from the Bank of England capitulating. You wait until the Fed capitulates. Watch the markets go up then. But watch the inflation roar back. And it might be, like I say, this might be something new. It might be a series of capitulations before they finally give in to inflation. Ultimately, our currencies, all the currencies of Earth, are all going to go to zero in the end. And there's very few avenues out. There's just gold, silver, and cryptocurrencies. If you want, okay, you can buy things like real estate, you can buy, and you can buy other things like art, and you can buy things like, stuff like that. Old collectible antiques and stuff like that. But if you want something that is pure liquidity, there's only three ways out. Gold, silver, and crypto. Things that are highly liquid, I'm talking about. Liquid assets. And of those, gold and silver are the two primary liquid assets. In other words, liquid means that you can convert them back into money reasonably well. Convert them back into, I shouldn't say money, currency. Because people, for the most part, don't accept as a means of payment what they should accept as a means of payment. Gold and silver and crypto should be accepted as a means of payment. But most people don't. Most people only accept something that's not even money. It's just currency as a means of payment. And so you have to convert back. This is going to change ultimately in the end. It's going to change to where this sea change is going to be where people are going to say, hey, I don't want the currency. I don't want it because it's going down in value too quick. When that moment happens, everybody's going to want to get out of these currencies and into something that people want. In other words, we've been fooled into thinking this is money for ages, this currency. And when it's found out it's not really money, and what real money is, it often reminds me of this show that Mark Dice did, on YouTube, where he went out and offered to give people a 10-ounce silver bar. Just give it to them for free. So he walked up and he'd say, do you want a Hershey's chocolate bar that he probably bought at the dollar store for $1? Because back then they used to be $1. For a big chocolate bar, used to be a lot cheaper than they are now. $1 or $2 probably. You could buy them at the dollar store. Whatever, Hershey's bar. Not anymore. Now they've shrunk the size right down small. And well, anyway, he'd offer them a chocolate bar and or the silver bar. And most people, in fact all of them, took the chocolate bar. It was the same size, chocolate bar I think was a little bit bigger than the silver bar. It's just funny, he went up to the last person on the thing, and I could see he didn't want to lose his silver bar. So the last person, like, made it through, like, all these people not taking it, and then the last person, like, is the hardest to do, because think about it. If you were him giving away the silver bar for free, you know, the last person would be the most difficult, because you're worried that they're finally the one that's going to take your silver bar. Anyway, let's move on and take a look at what's going on with, where were we? We were on oil. Crude oil, 78.85 today. No, 79.85, I should say. It's up $1.35. Now, see, when crude oil moves up, there's a positive signal that the markets are going to move up too. And take a look at the MOVE index. What I noticed about the MOVE index, it says there's certain indicators here that the Fed watches. Okay. Hey, watch this. This is one of their indicators, and it's jumped. Now, another indicator is the dollar index. They watch that carefully, and they also watch the bond market very carefully. Those are 3 indicators that the Fed watches. Okay, so this going up. This has went up quite quickly to 158. It was hovering around the 130s. Now it's at 158, so it's a jump in the MOVE index. And I guarantee the Fed's watching that. Let's take a look at bonds and rates today, and we're seeing falling yields, and quite substantial. 12 basis points in the 10-year. 10 years at, that's a 10-year at 3.84, and the 30 years at 3.76, with a 6 basis points move. So the yields are falling today. And so what that means is, it means it takes some of the pressure off the Fed today with yields falling. Let's take a look now at the U.S. dollar index, and we're seeing the dollar index is rather high at 114.27 on the U.S. dollar index. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. You guys have a great afternoon. Bye-bye.